Time to check in on the markets with our business editor, Tikki Fullerton. Tikki, a less eventful day than yesterday, but we're not quite at the 6,000 point mark.
That's right. Good afternoon, Kieran. Yes, no more confusion about where we're sitting with the US-China trade agreement, which happened yesterday. I think we're clear around that. It's still on. Yet not much movement. We ended up 0.19%, the ASX 200 at 5965. So we're creeping back to that 6,000 mark. A little bit of up and down today, but really just a slow creep up. News on the markets. I suppose the special EGM of TPG to approve of the Vodafone TPG merger. That all went ahead. David Teoh's pretty happy about that. He's giving shareholders a special dividend. The banks were dragged towards the start, but they finished overall the sector just above flat. So the only other news really was people still trying to make sense of the Woolworths trading update yesterday. And as I say, it was down just off 0.63% today, Woolworths. The big news really coming out of there is that they're putting in restrictions again down in Victoria because there seems to be a bit of panic buying there again with the corona numbers going up.
Yep, and a new development in the sale of Virgin. What's happening?
Well, that is quite a development, actually. And this is all about the bondholders who are coming in with, we all thought this bid would be done and dusted for the next few days with these two US buyers fighting for Virgin Australia. But the bondholders have come back with another bid. They're allowed to do this under the corporations law. They don't have to stick to Deloitte's schedule there. Now, their problem is that they're unsecured debt holders and they look like they're only going to get, less than 10 cents in the dollar back. So they're pretty unimpressed by that. They have decided that they are going to put in an offer which basically converts, we think, their debt to equity. Somehow they're going to be throwing in a little bit more cash, maybe up to $1 billion. And so Virgin would be listed on the Australian Stock Exchange and go on. And they're sort of hoping, I think, that this will all go down well with Team Australia. Problem with this, though, Kieran, is that you've got yourself an airline that was struggling as it went into the COVID pandemic. Coming out of it, well, who knows how airlines are going to go. And really, Virgin Australia listed only had a free float of about 9 or 10%. The rest was all owned by other airlines. And one of the things that should have happened, I think, was that Virgin should have been taken private a lot earlier. It's a lot easier to run a company if you don't have these constant and continual disclosures. So there's a lot for the administrator to now think about in terms of weighing up these bids. The unions do not like the prospects of having a private equity US firm running the airline, but the airlines these two private equity firms are going to be pushed a bit probably on price and what they can do for workers going forward. So interesting play going on here.